You know, for decades, we've all been sold this idea that the 30-year mortgage is the golden ticket to the American dream. But what if that ticket is actually for a financial trap? Today, we're going to pull back the curtain on a system that might just change how you think about owning a home forever.
And that quote, that's really the mission here. This isn't just about paying off a loan faster. It's about taking back control. It's about achieving real financial freedom and making your money work for you, not for the banks.
All right, so before we can even talk about the solution, we've got to break down the problem. We really need to pull back the curtain on how a standard mortgage works and talk about something called the capital drain.
You see, the secret sauce to this capital drain is a little thing called front loading. What that means is, for the first 10, maybe even 15 years of your mortgage, the huge majority of your monthly payment is going straight to interest. It barely even dents the principal. Your money, the money you work so hard for, is just draining away, making the bank rich, not you.
And this is where the trap really snaps shut. You're locked into this rigid, static payment schedule. It doesn't care if you get a big bonus or a raise. Your extra capital just sits there, trapped. You can't use it to pay down debt faster or to invest. The whole system is built for the lender's comfort, not for your financial speed.
Okay, but what if there's another way? A smarter way? What if, instead of just waiting around, you could pull a completely different lever, one that builds your equity like crazy? Let's take a look at that.
So on the left, you've got the old school way, lever 1. We call it passive appreciation. You're basically just sitting there, hoping and praying the market goes up. It's slow, unreliable. You're just waiting. But then, on the right, you have lever 2, the AIO, or all-in-one engine. This is an active strategy. The AIO loan is basically a home equity line of credit that also acts as your main checking account. So when your paycheck gets deposited, it immediately pays down your mortgage principal. That's it. Your paycheck goes in, your mortgage balance goes down. Instantly. And because of that, you are actively crushing your principal balance every single day, which just kills the amount of interest you have to pay.
This is a total mindset shift, you see. You stop being a passive occupant who's basically just renting money from the bank, and you become an active owner, using your own cash flow to systematically destroy your debt.
Okay, so talk is cheap, right? The theory sounds good, but the math is where things get really interesting. Let's look at a real-world example with two siblings who start out in the exact same spot financially. This is where it gets fun.
On one hand, you've got sibling A. They stick with their traditional loan. Hey, it's a great low rate, right? Then you've got sibling B, who decides to switch to an all-in-one loan. They use their regular income to constantly hammer down that principal balance. Remember, same house, same income. The only difference is the financial tool they're using.
So what happens? Well, after 25 years, sibling A, with that supposedly great rate, ends up paying, get this, over $248,000 in pure interest, $250,000. Poof, gone. Meanwhile, sibling B, by just letting their paycheck do the work every day, pays off the exact same house in just under 10 years. Let that sink in for a second. We're talking about wiping out decades of payments. Just gone.
But wait, it gets even better. This is where the story goes from good to absolutely mind-blowing. After sibling B pays off their house, they take the money that would have been their mortgage payment and they invest it. So by the time sibling A is finally making their last payment, sibling B has the same paid-off house plus over $1.1 million in the bank.
I mean, just look at this side by side. The difference is it's staggering. We're not talking about a small tweak here. This is a completely different financial life, a completely different retirement, a completely different legacy.
So you've seen the math. It's powerful. But the big question is, how does this actually work for you? Because the AIO isn't just a mortgage, it's more like a financial command center. Let's look at two really powerful ways it can be used.
So whether you're a business owner who lives and breathes capital efficiency, or maybe you're over 50 and your main focus is security and a rock-solid retirement, this tool adapts. For the entrepreneur, it's your treasury. For the planner, it's your anchor.
For entrepreneurs, this is a game changer. Think about it. Instead of your business revenue just sitting in a checking account earning zero, you deposit it straight into the AIO loan. Every single dollar instantly lowers your mortgage principal, which drops your daily interest costs. But, and this is key, that money is still totally liquid. It's a war chest, ready for you to pull out and invest back into your business the moment an opportunity comes along.
And if you're looking toward retirement, this is all about security. It's about peace of mind. I mean, imagine having your house paid off in under 10 years. Now imagine if, God forbid, you lost your job. Instead of a massive mortgage payment hanging over your head, you've got this huge line of credit, your home equity, to draw on for living expenses if you need to. It's the ultimate safety net. It's a financial anchor that protects you from whatever life throws at you. You literally become your own bank.
All right, we've looked at the problem, we've looked at the solution, we've seen the proof, and we've seen how it can be used. The only thing left is to see how this path to freedom could apply to your specific numbers.
So I have to ask you, right now, after seeing all of this, is it possible that the single biggest thing holding you back from building wealth isn't your income or your investments, but the actual structure of your mortgage?
Well, there's a really simple way to find out for sure, and that's exactly what a capital efficiency audit is for. It's a quick, no-nonsense 15-minute analysis to see exactly what your financial picture could look like with this strategy.
Now, I gotta be straight with you. This isn't for absolutely everyone. It's designed for people who are in a pretty solid financial spot. Generally, you're gonna need a good FICO score, a debt-to-income ratio that's under control, at least 20% equity in your home, and some cash reserves.
So, if that sounds like you, the next step is simple. Book that audit. We'll calculate a number called your effective rate. It's the true all-in cost of borrowing once you factor in how your daily cash flow is crushing your principal. Honestly, it's the only number that really matters, and it's the key to unlocking a totally different financial future.
Okay, and of course, we've got to cover the important legal stuff. This isn't a commitment to lend. All loans are subject to full credit approval, and Epic Lending is proud to be an equal housing lender.
And there's the NMLS number on your screen if you want to look up any licensing info. If you're ready to stop renting money and start building real wealth, take that next step. Thanks so much for your time.